interest rates have gone down. You want to know how far they've come down, what interest rates look like. You want information from someone who's honestly not trying to sell you anything, just trying to give you good information, let you make good decisions. So first and foremost, good morning, good afternoon, good evening, one rental at a time community. It's your boy, Matt the Mortgage Guy. Wanted to get something out there even while Mike is out gallivanting the world, because you guys have heard mortgage interest rates are coming down. You're actively in the market as an investor or as an owner occupant looking for a new primary residence, and interest rates have gone down. You want to know how far they've come down, what interest rates look like. You want information from someone who's honestly not trying to sell you anything, just trying to give you good information, let you make good decisions, and where I think interest rates are headed in 2024. That's what I'm going to talk about over the next few minutes, is what have we seen over these first couple of weeks of November, and more importantly, what I see in the future, because I honestly do think that we've seen peak interest rates. Somebody somewhere said they saw mortgage interest rates go into 19. I think that's foolish. Even some of those that think that mortgage rates could hit double digits, it would take a lot of weird things happening with the economy for mortgage rates to hit 10%. So first and foremost, what have we seen over the last couple of weeks? This week specifically, we saw inflation data come in better than expected. And better, I mean 4% versus 4.1 or whatever the expectation was. I think the expectation was 4.1. It came in at 4. I'm not into the details. I don't know if each one of you necessarily cares to be either, like, core CPI and headline CPI and this number, that. It's headed in the right direction. It continues to go down. The Fed, most people believe, is done. They're done with raising their Fed funds rate. They're done with rate hikes. That stuff affects mortgage rates. So everybody who is in the business of predicting what the Fed will do next year has started to, forecast in rate cuts. As inflation comes down, they're going to start cutting interest rates, cutting the Fed funds rate specifically, which will affect interest rates. So let's look at mortgage interest rates, see what they did over the last couple of weeks. This is January 1st through today. Today, the day I'm recording this, November 15th, we're right in the middle of the month. We started the year. Mortgage News Daily is a great source of a nationwide average. Sure, it's for people with great credit. Sure, it's probably got a point or so baked into it, but still gives you a good nationwide average. If you're not paying points up front or your credit is less than perfect, you're probably going to have a rate a little bit higher than this, but this is where average consumer who's got great credit and a good down payment is locking a 30-year fixed rate loan. Started the year at 6.5. We saw it tick down and briefly, very, very briefly, go sub 6% early February 2023. And then it's been a pretty steady climb up to this 8% that we saw in October. Now, if you want to think about what the unwinding of mortgage interest rate increase might look like, if we start to see rate cuts versus rate hikes and we go the opposite direction, it might look like this upward trajectory we're seeing. Remember, it doesn't move in a straight line. There's going to be some ups and downs. There's going to be some bumps. But if I were to make a prediction, and me and Mike spoke about this, I would say over the next 18 months, we go to the 6.25 to 6.5 range, which means it's slow and steady going the other way. This big downward from 8 to 7.45, where we're at today, don't expect it to be like 2 more weeks down to 7, 2 more weeks after that down to 6.5. 1, highly unlikely. 2, it's honestly the last thing you want if you're an investor or a home buyer who's buying something to live in. That would cause a big, big uptick in demand, and we just can't handle that. There's not enough supply. The big uptick in demand would have upward pressure on prices for sure, 1,000% guaranteed. So that's the last year. Looking forward to the next year, 2024, 2025. The predictions I made when me and Mike spoke, let me remember. I think we did a June 30th prediction of I was 6.75 to 7%. And then my end of next year projection, I think I was 6.5%. Was that it? Something like that. That sounds right. 7.5 today, 6.5 the end of next year. And in the meantime, between time, some ups, some downs. This piece of economic data caused a little bit of uptick. Oh no, this one caused it to go down because inflation is on its way down. Every single indicator that people look at tells that, this rapid increase in the Fed funds rate has done its job for the Fed. It has sucked, this inflation, all this money out of the economy, and it will take some time. There's some lag effect for it to actually, do its intended purpose, but inflation is coming down. So let me know if you got any questions at all. As always, if you go to greatmortgagebroker.com, fill out that quick form. Me and my team are happy to help in 48 states. If you want to connect me about a one-off question, leave a comment down below or fire me email, matt@mtmg.com. Talk to you soon. Bye-bye.